The housing market crash has officially started, according to Zillow. We're finally getting the data in to prove exactly what many of us that follow the housing market have known for months, that the housing market crash is here and we're seeing it prove out in the data. New home construction, which is a leading indicator to what's happening in the housing market, has already started to fall off a cliff. Now, this is the first time in many years that we've seen a slowdown in new home construction. And not only is it a slowdown, but it is absolutely cratered as buyers are just exiting the market. Certain markets are being affected significantly more than others, with annual declines of more than 50% in housing prices. Stick around to the end because you'll definitely want to see that data and see which markets are being affected the most. And real quick, if you haven't yet already, remember to subscribe to my channel so you don't miss any of the great real estate content, because so much is happening so quickly and I want to keep you guys informed. All right, so this first article I want to cover is from Forbes, and it's the housing market faces growing risk of multi-year collapse as new home construction craters. New housing starts unexpectedly plunged more than economists projected in July to the lowest level in more than a year as home builders grappled with dwindling demand for new homes. And though some experts remain optimistic that the market could be due for a quick recovery, others are only increasingly bearish. I honestly don't see how we could be due for a quick recovery. Interest rates, have continued to go up, and as the Fed continues to push those rates higher, I think it's really unlikely that we're going to see a quick recovery here. As this demand starts to cool down, we'll see new home builders dropping the prices of those new homes, and of course all that will continue to flow through into existing homes, which is what we've seen. Now, these three paragraphs here are really interesting. However, others are more cautious. Fitch Ratings released a note Tuesday morning warning that the likelihood of a severe downturn in the U.S. housing has climbed as homes have become increasingly unaffordable to most Americans. Again, I think this is the kicker here. It's just affordability is really the biggest downward pressure that we have on home prices, where people just can't afford to get into any sort of home, whether it's a new home for a family, a new family, or whether it's people that are looking to upgrade and move up into homes. I mean, this is a part of a traditional housing cycle. If you think, a new family, newlyweds with 1 or 2 kids, they move into a home, they get an entry-level home. After 5 or 6 or 10 years, generally they'll upgrade and move into a bigger home. And then after a couple more years after that, they'll upgrade again. And this is kind of how the housing cycle works. And now many people are just stuck in the home that they're in right now, because for many people, they can't even afford, if they had to go out to the market, they couldn't afford to purchase the home that they're currently in, let alone, save up for a home that's, $100,000, $300,000, $500,000 more than their existing home, which is what many people would have to pay to get into an upgrade. And the article continues, the firm predicts only a moderate pullback in the housing market, marked by a mid-single-digit decline in activities, such as starts and new home sales next year. But it also acknowledged housing activity could fall roughly 30% or more over a multi-year period in a worst-case scenario, pushing home prices down between 10 and 15%. Now remember, this 10 or 15% decrease in home prices, this is on a national level. If you remember back to 2008, home prices nationally fell about 19%. But remember, the housing market it's really hard to look at it combined on a national level. You have to really look at it at a regional level to understand what's happening. And some markets are going to decline way more than 10 or 15%, and some markets will survive through this with probably not much decline at all, which is the exact same way that it worked in 2008. If you remember, markets like Phoenix and Vegas absolutely got pummeled, and other markets like Dallas didn't really have much of an effect at all. And this last paragraph here, this crucial quote, the whole housing sector is now in retreat, says Pantheon macro chief economist Ian Shepherdson, noting the latest data shows that multifamily starts have peaked after surging since early 2021 and reaching record levels under construction. Shepherdson predicts the downtrend in construction activity will continue to fall until early 2023, given that mortgage applications have plummeted 30% from a December peak and have yet to find a bottom. And again, guys, we're going to keep seeing those mortgage applications decrease. With rates this high, with home prices still really, really high, and rates honestly are probably going to continue going up, it's going to be a long time, I think, until we see the amount of mortgage applications increase, which is a big signal of demand. Now, I wanted to jump real quick over to this next article from Redfin, which says home buyers are increasingly backing out of deals as slowing market boosts negotiating power. So what this article is saying is just that homeowners now, the buying power is starting to shift to buyers as opposed to sellers. And you can see from this graph, home purchases are getting canceled at highest rate since 2020. And what this is showing is the monthly pending home sales that fell out of contract. So again, this could be for a number of reasons, whether financing falls through or a buyer pulls out or a seller cancels, whatever it is. But you can see that we had a spike here in 2020. Obviously, we all know why that happened. But now we're seeing this massive spike up again, which is way above normal. Normal, we're hovering around 11 to 12%, now jumped up to 16%. Again, this is due to affordability and interest rates. A lot of people that have gone under contract that thought that they had funding secured from a bank are just not securing the loans that they need to secure because they don't qualify, with a rate that's at 6%. They probably qualified at 3% or 4%, but now at 6%, a lot of people just aren't able to afford these homes that they're looking at, and so they're having to back out. Now the article continues and tells us exactly which markets we're seeing the greatest number of buyers back out. Jacksonville and Las Vegas have the highest rate of home purchase cancellations. In Jacksonville, roughly 800 home purchase agreements were called off in July, equal to 29.3% of homes that went under contract that month. That's the highest percentage among the 93 U.S. metropolitan areas that Redfin analyzed. Next came Vegas, Lakeland, Florida, New Orleans, San Antonio, Orlando, Palm Bay, Deltona, Atlanta, and Pensacola. And so you'll notice here 6 of the top 10 metros are in Florida. The article says Florida exploded in popularity among homebuyers during the pandemic and has also seen among the highest price growth in the nation. That's causing competition to slow, meaning more buyers are negotiating and backing out if sellers aren't giving them what they want. In Orlando, 37.4% of homeowners written by Redfin agents faced competition in July, down from 81.4% a year earlier. That's the largest year-over-year decline among metros analyzed by Redfin. So I think this quote here also kind of sums up exactly what's happening. Another one of my buyers recently backed out of a deal because the home needed a new roof and the listing agent said that they weren't sure that was possible. My buyer didn't want to deal with the trouble and decided they preferred to move into a move-in ready home. So what we were seeing a year ago or 2 years ago where sellers just didn't have to make any concessions is just not happening now because we're not seeing 2, 3, 4, 10 people offering on homes sight unseen. Now we're really starting to see people negotiate and understand what these homes are worth, that there's not infinite money around and infinite competition to get whatever home is on the market. So again, I've said this before, but I think we're still seeing really strong demand on great homes and great areas that are ready for sale. But a lot of the homes that probably would have sold a year ago quickly that still need a lot of work, we're still selling for just as much as all the other homes and just as quickly. We're not seeing that anymore. And that brings us to our final article that I wanted to share with you guys today that walks through which of these housing markets are seeing the biggest declines in prices. So this is really interesting. Wanted to make sure I shared this with you guys. So this is from Zillow data, and the title is Buyers Gaining Time and Options as Housing Market Rebalances. After 2 years of unprecedented growth, national home values fell slightly month over month for the first time since 2012. The year home values hit a trough after the housing bubble and bust of the aughts. While July's housing market data update is big news and could get first-time buyers' hopes up, the future is unlikely to bring meaningful improvement to housing affordability. Now, I don't really agree with Zillow here that we're not going to see meaningful improvement. Again, I think on a nationwide scale, it's going to be really slow to see prices dropping. But in some of these markets, we're already seeing massive price decreases, and we're going to continue to see those decreases, especially as we hit the winter, I think is when we're really going to see an uptick. So here you can see the home value index, and what they were saying is month over month change in price. It's the first time since February of 2012 or January that we've seen a decrease. So now in July of 2022, we've finally seen a month over month nationwide decrease in home value. And again, wanted to show you guys which markets those were. So here are the top markets that we're seeing decreases. And you'll see, remember, this is a month over month decrease. So San Jose saw a negative 4.5% decrease. So if you annualize that, that's over 50%. That's, I think, 54% decrease in home value. Of course, I'm not saying and not fully expecting this to continue, this month-over-month decrease to continue for an entire year. But at this rate, you can just see how significant that is. And these that are 2.8, 2.7, 2.5, these are also massive, massive increases, which lead to double-digit annual decreases. And you'll notice here a lot of these top ones are California. So you can see San Jose, San Francisco, Sacramento, San Diego, Riverside. So a lot of these California markets. And I think this data is really interesting to compare to the previous article I showed, which was the buyers pulling out of pending home contracts. And we were seeing a lot of change and a lot of buyers pulling out in Florida. And yet that hasn't yet translated to massive price decreases. And I think that's because California is in a bit of a different spot in their housing market versus Florida. And I think Florida will be where California is in maybe 6 to 9 months. So from what we saw over the pandemic, right, we saw a lot of these markets losing people, and the demand vanished, a year ago or more ago. And so now we're finally starting to see the sellers and real estate agents react to that decrease in demand. And so they're bringing those home prices down. And we're just starting to see that demand drop in places like Florida. So again, I think it's just Florida's where California was probably at 6 to 9 months ago. So I fully expect us to start seeing decreases in Florida here in the coming months. All right, guys, that wraps up the video. I really hope that the data that I walked you through was helpful to understanding what's happening in the housing market. If you guys could do me a huge favor, don't forget to smash the like button, comment down below if you have any questions or want to see a deep dive on any specific markets, and don't forget to subscribe to my channel so you guys won't miss any more future updates. All right, I'll see you guys in the next one.